Good morning, it's Monday the 7th of March and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So let's get straight to it. So let's take a look at the economic numbers being issued this week. And we start today in Germany, when we'll get an update on their retail sales and factory orders. We'll also hear how investor confidence is faring across the wider Eurozone. Tuesday gives us an update on the Eurozone's GDP, as well as Australian consumer confidence and how GDP is faring in Japan. On Wednesday, we'll hear an update on inflation over in China. We've got a budget report over here in the UK and the EIA oil inventories. Now, inflation remains a burning topic across the global economy, so it's going to be interesting to hear the latest feelings from the European Central Bank as they give us their latest rate decision on Thursday, and that's something we'll discuss in more detail in a moment. We'll also discuss the release of the latest CPI inflation figures in the US, also due on Thursday. Finally, the day also brings the latest US jobless claims. It's the UK's turn on Friday with our update on GDP, and we'll take a look at that towards the end of this video. And we'll also get an update on inflation in Germany on Friday and the latest US Michigan sentiment. And the companies that we'll hear updates from this week are as follows. On Monday, it's the turn of Clarksons. Tuesday is the turn of the high street bakery Greggs, as they release their 2021 preliminary results at a time when they're undergoing significant changes at the top, and we'll discuss this shortly. We'll also hear from Ashtead Group, Fresnillo, Domino's, Direct Line and Robert Walters. Wednesday brings us Kia Group, Tullow Oil and Prudential. On Thursday we'll hear from Balfour Beatty, National Express, DS Smith, and over in the US, Rivian Motors, and also US online legal document, a DOCUSIGN, who released their Q4 and finals on Thursday, and we'll talk more about these shortly afterwards. And finally on Friday, we'll get a trading update from British property developer and house builder Berkeley Group. We'll give our thoughts on this towards the end of today's video. Well, it's no surprise that the Russian invasion of Ukraine has been a key driver of risk sentiment across the week. As the West imposed crippling sanctions, attacks escalated, and as Russia allegedly struck a nuclear plant, stock indices fell sharply. The DAX tumbled 10% last week as, of course, Germany remains so dependent on Russian energy, and the country's economy stands vulnerable to ongoing developments. The FTSE fell 6%, finding some support from energy, and resources stocks found support from surging commodity prices. Again, also no surprise that Russia headlines will continue to drive sentiment and commodity prices as the week unfolds. So let's take a look at this week's financial stories in more detail. Well, it's all change at the top for Greggs after the high street bakers confirmed at the start of the year that CEO Roger Whiteside would step down after 9 years at the helm. Now, he'll be replaced by Roisin Curries, who joins the board after 12 years as the head of retail. Now, she'll take over fully in May, and Whiteside will be a tough act to follow. In January, a trading update showed that the company was in good shape, with sales of £1.23 billion, up from £811 million the previous year. So instead, the focus will be on rising raw material costs and the impact of removing Plan B restrictions as virus restrictions are indeed lifted. After the share price hit an all-time high of $34.40 in December last year, it has tumbled over 25% to its current level of $23.35. Thursday brings us the latest ECB interest rate decision. Well, the ECB is caught between a rock and a hard place right now. Inflation was already at record highs of 5.8% and in some countries above 10%, and likely to continue rising. The ECB kept monetary policy unchanged in the last meeting, with interest rates in negative territory. That said, in the press conference following the meeting, ECB President Christine Lagarde adopted a much more hawkish stance, which caught the markets a little off guard and did push the euro higher. Those comments were then backtracked in the following week. However, since then, data showed that wholesale inflation rose to 30.6% in January, suggesting that consumer prices are indeed set to continue rising. And this was even before Russia invaded Ukraine, which has seen energy prices shoot higher, which will then push consumer inflation higher still. Growth is also expected to take a hit, bringing fears of stagflation to the forefront, which could see the hawks pull back on rate hike expectations. The PEP is set to end this month, bringing the APP asset purchase programme into focus. As of now, the euro is trading below 110 against the dollar. Also on Thursday, we'll hear the latest CPI figures over in the US. So US inflation rose to 7.5% year-on-year in January, a 4-decade high, while core CPI, which excludes the more volatile items such as food and fuel, rose 6%. Consumer prices are expected to continue rising in February to 7.8%, with inflation showing no signs of cooling. So Federal Reserve Chair Jerome Powell signalled a 25 basis point rate hike from the US Central Bank when they meet next week, regardless of the Russian invasion into Ukraine. With the conflict expected to push inflation levels across the globe even higher, the big question is, how many hikes can we expect from the Fed across the year? The US dollar currently trades at its highest level since May 2020 on the back of tighter monetary policy expectations and safe haven flow from the Russia-Ukraine war. Finally on Thursday, DOCUSIGN releases their Q4 and final figures for the year. Now, DOCUSIGN was one of the clear winners across the working from home orders as the virus spread across the UK, seeing explosive growth. However, its winning run has hit trouble over the past 6 months or so, with the share price falling 2/3 since September's all-time high of $315 to current levels of $100. The share price took its biggest hit when its quarterly revenue figures missed analyst estimates and 6 quarters of accelerated growth. Expectations are for earnings per share of 63 cents on revenues of $718 million. Now, we'll get an update on UK GDP figures on Friday. So at the end of last year, the UK economy contracted by 0.2% in December, as Plan B restrictions were implemented to stop the spread of the virus. The restrictions meant that people worked from home and avoided going out in order to be able to meet up with friends and family for Christmas. Well, that said, data also revealed that the UK economy grew by 1% in Q4, ahead of forecasts thanks to a strong performance in October and November. Across the whole of 2021, the UK economy expanded 7.5% after contracting 9.4% through 2020. Expectations are for GDP to recover at the start of 2022, with a rebound in GDP, increasing 0.2% in January. However, there are concerns that the conflict in Ukraine and surging energy prices could weigh on growth going forwards. With this in mind, do keep an eye on the pound and, of course, the FTSE. Berkeley Group has performed relatively well across the past 2 years, although the share price failed to reach pre-virus levels. Since the start of the year, the share price has been falling steeply and dropping from just shy of £50 to £36.70 at the close on Friday, as headwinds started to blow. Rising interest rates and cladding remediation, as well as rising material costs and staffing costs, are challenges the London and South East builder has had to face. Berkeley Group raised annual guidance by 5%, with consensus estimates putting a full-year annual guidance at £544 million, which is likely to be reiterated for the third quarter. In December, Berkeley Group also confirmed its plan to return £282 million to shareholders by 2025, which is expected to be highlighted again. So those were the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from CRH, Persimmon, Evraz, Rio Tinto, HSBC and Land Securities. A busy one in the 250 when we'll hear from Chemring Group, Renishaw, Micro Focus International, PZ Cussons, Alliance Trust, Assura, London Metric Property, BMO Commercial Property Trust, APAS Global Alpha and finally JP Morgan Emerging Markets Trust. So there you have the highlights coming up this week. As always, thanks for watching. Don't forget to click on that subscribe button to make sure you don't miss out on any of our regular videos. Also, as always, a reminder that if you haven't already downloaded our app, why not give it a try to make sure you receive all the latest up-to-date financial news and trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.